I'm doing a beginner's guide to trading gold. This is if you don't own any charting software or anything. First thing you're going to want to do is you're going to want to go to investing.com. It has free charts. They're pretty good. The ticker for gold is GC. We'll pull that up. This is much better than using GLD. Look at this. Yesterday, remember I said that I wouldn't have bought it out there even though it looked like it was oversold, and today it's down. Alright, so we're going to go click on technical chart. You're going to scroll down and you're going to enlarge, which is, hopefully this doesn't freeze on me. You're going to enlarge. Okay, you're going to go on the 1-day chart. You're going to go over to here to indicators. You are going to go down. You're going to click stow. You are going to click RSI. Exit out. Always make sure that it's not on line. Candlestick. Candlesticks are much better for this stuff. Excuse me. Okay. Now, basics to charting gold. Let's say we don't mess with lines, we don't mess with trend lines or support levels. Basics. We have stow and we have RSI. These are short-term buy-sell indicators, okay? For a strong buy indicator, you want to see a drop below the 30 level in RSI. That is the most certain chance that you are going to make, that gold is going to pop. It's going to pop probably at least $50. Every time that gold has gone under it, it's popped $50. So that is a sure way of playing gold, and probably the most best way of playing it in a bear market, which we are currently in. Okay, in a bull market, hopefully this didn't freeze, but in a bull market, the best way to play gold is to use stow. So in a bear market, we use RSI. When we're being more cautious, in a bull market, we'll use stow. Okay? Stow, well, I'll just go back. During a bull market, when it bases under the 20 level, and we always look at slow stow, which is the red line. Okay? It's a better indicator. When it's under the 20 level, it's always a buy. When it's over the 80 level, it's a sell. Look, under the 20 level, buy. Over the 80 level, it's a sell. Okay? That's a short-term way of playing it, and it's matched up every single time. Remember that we are looking at the red line, not the blue line, okay? Because one is short and one is long. One is slow and one is fast, and you want to do the slow one. It's a much better indicator. So that's just how you would play this. And wow, gold is really dropping as we're speaking. What are we at? We're probably down 30%. Oh, that's good. Okay. And it'll give us a buying opportunity. Like I said, I want to see this RSI. I want to see it dip like this. That when I was talking about this a month ago or 2 months ago, I knew this thing was going up. That's why I was buying. Bought twice under there because I thought it was going up. And the reason I sold here before is because to me this was about to hit 80, so I wanted out. I had already taken my 25%. We're good. So that's the basics of how you would play gold. And obviously there's a lot more to it than that, but these are just beginner stuff. Okay, so some movements. And this doesn't allow me to draw with it, but let's go to the 15-minute chart. Yeah, okay. Now, here's some stuff that we're seeing. On big drops, there's usually consolidation periods. And it's going to take forever to draw, but watch. These periods are where you are going to hold. Well, let's see. And again, this is a free charting software, so it's not the best, but I mean, it's free. You don't have to pay for it. Alright, so these are consolidation periods. Once they hit the bottom range of these period, they drop out from the bottom. This one right here is the exact same thing. I'm not going to draw it out. It takes too long. It's consolidation period, consolidation period. That's probably why we're seeing sell-off in gold today. It's dropping out the bottom because it broke that line. So that's the basics that I would use for charting gold if you don't know anything about trend lines and resistance. Now let's go to trend lines and resistance. Okay. So we're going to look at support levels and we are going to look at resistant levels. And these levels are really accurate. They represent where people bought and sold into the market. So they'll show usually a good indicator of where the tops and bottoms will be, and they're really easy to find. This, obviously, a very obvious resistant level, right here. Let's draw it out. And again, you know, I'd recommend buying a charting system, but so look, right here, you see 1, 2, 3. Look at this. That's where we are exactly right now. Exactly. Okay? Now. Well, so if we bounce from here, where's the last place we based out? Right here. Okay? Look at that. Touched exactly here, here, and I guarantee that if we draw these two lines back, yep, look at that. Right there. We draw these lines back. Well, I'm not going to do it, but it'll show that that's where they stop and start. So right now, you know, I'm looking at this and I'm thinking if this bounces from where it is, which it could, which it probably will, it's probably going no farther than 1255 to 1245. Remember, these aren't exact lines, these are zones. Excuse me. So that's what we're going to be looking for. So that's just sort of a good indicator of seeing where you think stuff is going. So now, like if we break down from here, where do I think our next stop is going to be? Well, we got to look back to where last line that it changed hands, it got hung up on, right here, the 1110 level. It was resistance, it was support. So if we break here, we're going to have a big dump. So, I mean, we're going to see a equivalent of boom. So that's just how basic charting, but really for the short-term buy and sell, RSI, STO, remember RSI for bear markets, STO for bull markets, and this is, I mean, obviously a quick run through of a more complicated system, but that is just the basics of stuff you should be looking at. So like now, you know, I don't put these videos out every day, but if we're looking here and we're straddling, oh, here we go, we're straddling that 30 line. And you know, and you're like, well, when would be a good buying opportunity? And I'm not saying buy gold, I'm saying buy gold mining derivatives. Well, And if this thing breaks, stays under the 30 for 2 days, that would be a good time to buy. Right here, would here have been a good time to buy? Yep. Would here have been a good time to buy? Yep. So what we're looking at is, here would have been the best, but, this little movement in derivatives would have been a lot bigger than what we're seeing here, because derivatives they maximize movement. So that's just a basic. These are the two things you want to look at. And right now, like I said yesterday, I was like, man, it's not a buy because nothing really happened, and we're down again today. So, yeah, that's your basics.